In this video, I'm going to teach you what the infinite banking or family banking concept is and how you can use it to become your own bank. This is how the infinite banking concept works. It all starts with you. You've got to get paid, right? You get a paycheck once a week, once a month, every 2 weeks. And what do you do with that? You deposit it into the bank. Why? Because it's typically four little letters, the FDIC, which stands for the Federal Deposit of Insurance Corporations, which means the bank essentially puts insurance on your money up to $250,000, which means if anything were ever to happen, they guarantee you'll at least get that much back. Now, what does the bank give you in return for you storing your money there? Anywhere from 0 to maybe 0.1% interest back every single year, and unfortunately that is taxable. Now, the big question is, what does the bank do with your money? Do you think they just set it aside, keep it in the vault, and keep it safe, waiting for you to come and get it? No. They reinvest it and they reissue it. And when they reinvest, they put it in places that are going to give them a higher rate of return on their money. And one big place that they invest into is insurance assets. And the reason is because insurance assets are some of the safest capital banks can own. Banks do this. It's called BOLI, bank-owned life insurance, and corporations also do this. It's called COLI, corporate-owned life insurance. If you've ever read the book Money, Wealth, and Life Insurance by Jake Thompson, Chapter 2 will dive into a lot of the banks that are doing this and why they do it. Keep in mind, this book is about 10 years old, but you'll see here that banks such as Bank of America, Wells Fargo, JP Morgan Chase, and US Bank all have billions of dollars in life insurance assets because, again, it's safe capital. Now, as I mentioned, corporations also do this. You'll also see that they have a huge list of corporations that own insurance assets, from General Electric to AT&T to General Motors, of course, Prudential. You'll see Pfizer. You'll see Office Depot. You'll see Starbucks on here, Verizon, Walt Disney. Walt Disney used money from his insurance policy to help build Disneyland when he couldn't get a loan from the bank. You will see Bed Bath & Beyond, Nike, CVS, tons of corporations that do this too. And why? Because in return for them putting money in their insurance assets, they get to collect anywhere from 8 to 10% interest back every single year on average, and it's tax-free. Now, how does this work for us, right? Our goal is to essentially teach our clients how to cross out the middleman and go directly to where the banks are saving their money, which is the insurance companies, so that they can collect back the interest anywhere from 8 to 10% interest earned on average every year. And that's tax-free. That, my friends, is the infinite banking concept. It's the ability to put money somewhere where you're earning a higher rate of return, and you can borrow it out against your capital without actually depleting it. So now, how does this work for us? We've got to incorporate some permanent life insurance. I specifically like index universal life insurance because it grows this cash value component behind the life insurance simply by the client overfunding the cost to actually own the policy itself. And the cash value grows anywhere from 8 to 10% interest earned on average every year over the last 30 years, depending on the indexes that you're choosing to track. And that cash value is accessible to the clients at any point in the future, 100% tax-free through the different policy loan options that you have access to. And that money could be used to buy a car, to buy a house, to pay for college, or to start a business. You have complete access to that at any time. So you have the ability to borrow against your capital, allowing your money to still work inside your account, growing and earning interest, essentially just washing and rinsing and repeating the cycle so that your money never stays stagnant and it's fluid and there's velocity to what's happening inside your plan. But here is the key. You need to understand that these policies need to be designed correctly in order for this to work. Not every permanent life insurance policy you see issued is going to be an infinite bank. You have to understand that the more life insurance somebody gets, the more money they can put into that account per month or per year. The less life insurance they get, the less money they can put in. And when it comes to infinite banking, or what we call immediate access to cash, the client is typically looking to get access to as much money as possible within the first couple years. And how that works is we have to give the client the least amount of life insurance possible for the most amount of money that they want to contribute into that policy per month or per year in the very beginning. That is going to help keep their cost down, help the policy cash value grow quicker, which ultimately gives them more access to cash a lot faster to be able to do their infinite banking transactions as soon as possible. Now, it's also important to note that while we can do this with infinite banking inside the policy, I would not recommend using your life insurance policy for everyday transactions like grocery shopping or paying your phone bill or getting gas or making a car payment. I would use it for larger transactions, like I mentioned earlier, maybe buying a car, maybe paying off some debt, maybe buying a business or buying a house. You don't want to use it for everyday transactions because you don't get a debit card attached to your life insurance policy. There is a process. It does take 2 or 3 days to get access to your money. So just keep that in mind. So let's just say, for example, we have a gentleman that is healthy, that is a non-smoker, and he's 40 years old, and he would like to save $100,000 into his IUL, his permanent life insurance policy, over a period of 4 years and use this to become his own bank, meaning he wants to borrow money out relatively pretty quickly to go make some business deals or buy some real estate or make some large transactions. In order to do this, he would need to get $1.5 million in life insurance, which is the least amount of life insurance required for him to be able to put in $100,000 a year over 4 years without causing any sort of taxable event or what we call a MEC. And if he deposits that $100,000 in year one, immediately within 30 days, he would have access to be able to borrow out about $52,000. And he could loan that to himself and go and make any transaction that he wants and pay that back whenever he wants. After his second $100,000 deposit in year two, he would have access to about $154,000. After his third deposit of $100,000, he would have access to about $263,000 in the third year. And after his fourth deposit of $100,000, he would have access to about $379,000 in there after he did that deposit in the fourth year. So if he wants to borrow some of that money out, go make some business deals, make some transactions, he has the ability to loan against that $300K. And whenever he's ready, he can pay it back slowly over time. Now, if he does that, he might be charged an interest rate to do it, maybe 4 or 5%. But where can you go today to get a loan at that rate? At a bank. It's very slim to never, right? And then he has the ability to have his money working in two places at one time because it will still remain inside his IUL, growing and earning interest at 8 to 10% on average that we've seen over the last 30 years. And he can use essentially the insurance company's money to go and do whatever he wants. That's the concept of infinite banking, being able to earn interest in two places at one time. The real key when it comes to infinite banking and this strategy as a whole is making sure you're working with a licensed insurance professional that knows how to do this and has worked with these types of accounts in the past. You don't want to be working with just a random Joe Schmo off the street or a newbie, because this takes knowledge on how to properly design and structure these accounts. And there's also certain insurance companies that are better for this concept than others. Some don't offer the loan types that you need to be able to even do this in the first place. So if you're looking into doing this, I recommend you connect with somebody that you trust that's knowledgeable about this. If you'd like to work with me or my team, you can click the link in my bio or in the description below to schedule a call with us. If you want to just learn more about the infinite banking concept in general, I've got 2 videos here for you that will walk you through everything that you need to know to make sure you're doing this correctly. And of course, make sure you subscribe so you don't miss another video teaching you all the cool things you can do with your money. And I'll catch you back here next week on YouTube.